This is the Retirement Solution Podcast with financial advisor John Hicks, founder of J. Hagan Capital.
I'm Heather Branch here with John to talk about ways to help you better prepare for your financial future. RetirementSolutionRadio.com is where you can go to begin your own conversation with the team at J. Hagan Capital. We also have links posted in the show notes, so you can just click there if that's easier, or again, find us anytime at RetirementSolutionRadio.com. You know what irks me in the years of late about the holiday season?
Oh, I don't know.
Not even that long ago. Not like when we were kids. Like, just not that we're both in our 40s. But do you remember, like, it used to be the greatest and also simplest. You could give somebody a DVD or a CD or a book. It was a great gift.
Oh, absolutely.
And the internet has ruined everything. Everything is digital. You can't buy. What am I going to do? Give my mom an Apple gift card for $20? Like, that's not the same thing as opening up like a new novel that she was excited to read.
You make a great point, because my nieces and nephews were, their parents were asking, hey, what should we get Uncle John?
Yeah.
I'm like, listen, I listen to audibles.
Right.
I get most of my books. Now, I have them read to me because I just don't have as much physical time.
Right.
But I was like, you know what? I've still not physically read Bill O'Reilly's Killing Reagan.
Got it.
That is one of those, it's just, I think that I really want to fold the paper over.
You want to read the pages, yeah?
Yeah, I want to read the pages and flip through it, because it's one of those things I know it's not going to be a 1 or 2 night read. I know it's going to take some time, and those are something I want to get into. But I was starting to think, I'm like, man, how awesome was it back in the day?
I know.
When I would find some really awesome, like either Vietnam book or compendium for my dad, or maybe some World War II stuff that he was interested in. And it was like, pictorial, but there was really eloquent, editorial things in there. And it's like, man, and now people are like, I've seen something like that once on Google.
Right.
And so, and they just breeze through it. We just don't have the attention to detail that we used to have with this digital age.
I know. We're all ADD.
Any medication for that? No, I guess they have. We need to not be on medication.
Right. I know. I was sad though, because I was just reading Best Buy is planning to eliminate DVD and Blu-ray disc sales after this holiday season, because everybody is streaming the content, and they're not going to sell it anymore. They're like, it's not worth it.
I also believe in that, only because, I've laughed over the years. My family, we still drive the Swagger wagon, which is a 2017 Toyota minivan.
Yeah, it is.
And that thing has been a freaking battle tank.
Yeah.
It is awesome. The kids, of course, have destroyed every inch of it, but it only has 80,000 miles on it. I bet I get 200,000 miles out of that thing. So I'll be talking about this the next 15 years when I'm on this radio show.
Mm-hmm. I like
it. Amazingly enough, in the back, there are 2 fold-down screens, DVD, and it still plays DVDs.
Nice.
And so the funny thing is that every time I see, something decent, when we're on a road trip, we don't do as many of those as we used to.
Yeah.
When we're on a road trip, I will still find those DVDs for like $0.25. As long as they're not scratched up, I get them and I throw them in and the kids are like, man, Dad, we haven't seen this before. Or whatever, it's like Free Willy or something horrible. Space Jam, the original with the real Michael Jordan and Bugs Bunny. Or, whatever, Back to the Future, the original. And they're just like, oh my gosh, that's what you guys watch? You guys were crazy, terrible. Or whatever it is. No, but DVDs, I get it. So like, I was trying to think myself, we found an entire box when we were moving stuff around. I'm talking, I don't know, probably what cost me $1,500.
At least. They used to be $20 a DVD,
more,
right? Yeah.
Even in like the Star Wars trilogy, the collector's junk and all that stuff.
Spend so much money.
Do I even have a DVD player hooked up in the house?
Yeah.
Ladies and gentlemen, I know I do not. In my current home, I do not have a DVD player outside of my minivan. That's how it works.
That's funny.
I don't even my laptop.
You're part of the problem, John.
I use a MacBook and it didn't even have a DVD slot.
It doesn't have a CD drive anymore. Yep, I know.
See?
Even our laptops are going the way of everything is in the cloud. Everything's digitally stored.
Imagine how much space is going to be left there in Best Buy when they clear out those middle 3 rows.
It's going to be sad.
What are they going to fix? What are they going to fill it with?
I don't know. That's a problem for Best Buy to figure out, I assume.
That's not my issue.
So, ladies and gentlemen, you heard it here first. If you haven't heard it yet, if you're looking for DVDs, you're going to have to look elsewhere, because Best Buy is saying goodbye to the discs for future shoppers and generations to come. So, something else that we can all look forward to in the new year. This is actually a positive thing. I will say this. This is something we've been hoping for. Well, I guess it depends on you. You might correct me here, Mr. Hicks. The idea of potentially lowered interest rates, because that's what people are thinking is going to see start to happen now that inflation has finally seemingly leveled off. Meanwhile, we look at the market and try to understand what our opportunities are there. It was up 8% in November, but some economists saying that it's based on hope that interest rates will do what we're thinking, come down next year. Economist Ken Polcari is telling Fox Business he disagrees with this. Here's what he said.
And so this rally that we saw in November is really built upon that idea that the rate cuts are coming. It's illogical to me, considering Jay Powell has made it very clear that the door is open and he's still not confirmed or sure that the hike cycle has ended. The market is stamping their feet saying, no, we need lower rates. We don't need lower rates. The market can function with 5% rates. And you and I both know that over time and history in the markets.
Ooh, I agree with that.
Oh, you do? Okay, so let's talk about it then. Tell us your thoughts.
Well, he's 100% correct. Who was this? This was Ken.
Ken Polcari.
So I thought that assessment was very accurate. So number one, the only reason that November was what it was, there was a whole bunch of, jitters, giddiness, excitement that all of a sudden next year, some prognosticator feels that rates are going to come down.
Right.
Now, here's the thing. I will already go ahead and say a little bit that's been correct. It's been correct, at least in the very short run. In the last 3 weeks, we've already seen rates come down. So if you locked in an investment last month, congratulations. There's a possibility that may be the best lock-in you're going to get for the next period of time. That's one side of the story, right?
Okay.
The second side of the story is that we've already seen rates come down, so these short-term people may be correct. But, ladies and gentlemen, we can easily live in a 5% interest rate environment. As a matter of fact, we've already seen 30-year mortgages go from 8.25% down to around 6.6%. In some markets, a little bit less than that. Guys, that is a marked difference. It's a tremendous difference. Yeah. And if you think that I'm crazy, I want you to think back for a second. Unless you are in high school today, I want you to think back about the very first house you bought. And I want you to think if that was in 1978, 1984, 1995. My first house, I believe, was in 2007 or 2000. No, it was 2006.
Okay.
In 2006, I was paying 8.25% interest.
Right.
I didn't think that was terrible. I didn't think it was great either.
Right.
I'm sure my credit back in the day wasn't, the very top of the food chain, but still, it wasn't like it was a subprime mortgage. But the amazing thing is 8.25%. And did I make those payments? Of course I did.
Right.
And did everyone else that was in that same situation or better until 2008 happened?
Yeah.
Well, of course they did. And if you think about it now, when we think, oh my gosh, if you don't have a mortgage under 3.5%, you're crazy. Well, guys, we were in a very controlled environment when interest rates were zero. If you have a 2.25%, 2.5%, 3.25% interest rate, as long as you like that house, please don't pay that off. At least not today, because you can get 5.25% from a money market rate to pay those bills for you, right? So just be wise about it. Leverage is not all bad. Dave Ramsey gets a lot of stuff right, but on this one, he gets absolutely wrong. If you can be paid for someone else to make those payments for you, that's a smart thing. It's called leverage.
Right.
Proper leverage. Anyway, so coming back to that, do I think that interest rates can stay this high for a while? Not only do I think they can, I think they should. Okay? Because for so long, Americans were yield starved. We were forced to go to the United States stock market because nothing else was good.
Right.
Because banks paid you zero.
Yep.
International was stinky. Emerging markets were terrible. Oil wasn't doing what it has done here recently. Gold wasn't even as good for nearly 12 years. For 12 years, most things stunk except for the U.S. stock market. I think it's really nice right now that I can tell my clients, hey, not only do we not have to take all the risk of just being in the United States stock market, we can diversify. We can get 5.25% money market, which is fully liquid and backed by banks. In this one bucket, on another bucket, we can use insured indexing and potentially get 6 or 7 or 8% on our money with no downside risk. And often it can be insured either by banks or insurance companies. And on the third side, we can use principal protected notes. Now, guys, I've seen these give anywhere between 7 and 9% rates of return, fully principal protected. Of course, it's backed by a bank. So you just got to make sure that bank is solvent. Yeah. Guys, these are very attractive alternatives to only being invested in the U.S. stock market, which frankly, let's be real, last year lost you 20%.
Yep.
So when we think about is we want to hope that things go well. Hope is a 4-letter word, but so is math. And the one thing I know is that if the market historically has done 7, 8, or 9, or 10, That's a big difference than if you were getting 1% from the bank.
Yep.
But now if you can get 5 or 6 or maybe even 7% with low or zero risk, how good is that 8 or 9 or 10 compared to 7 with no risk?
Right.
See?
Yeah.
And that is the very interesting thing. So what Ken is talking about, he says it's just too optimistic. Mm-hmm. My crystal ball broke a long time ago, and I have quit trying to even apologize for it.
Yeah.
The point is that if you look at today, if you look at what we have access to 5, 6, 7, 8, potentially even 9%. And again, rates have shifted. Mm-hmm. We can't do what we did even just last month.
Right.
But if you get 5, 6, 7, 8, maybe even 9% with limited or zero risk, the question is, how much more do you think that the market's going to give you?
Right.
If you're investing in artificial intelligence and you want to be hyper risk where you could make 90%, but you could lose 50%, well, you could be correct if it pans out in that case. But the majority of us, as we get closer to retirement, closer to needing this money to live off of, guys, 6, 7, 8 is pretty dang good. I mean, pretty dang good. So regardless of if I'm correct, because I agree with Ken, and rates may not move down as fast as you think, what I would suggest is give some consideration. Don't keep your money immediately liquid in those accounts that could potentially go down if Ken's wrong, if I'm wrong. Well, lock in some things. Lock in a handful of your portfolio pieces. Just a handful at maybe 3 to 5 years. Give yourself potentially the best rates we've seen in almost 18 years. Mm-hmm. Lock a little bit of that. If you only get 5.5 to 6% on a portion of your money for the next decade, think about the last decade. Would that have been an okay situation?
Yeah.
Of course it would. So use history as a guidepost.
Got it.
I don't know what the Fed's going to do. I don't know what's going to happen next year. Who knows who's going to win the next presidential election?
Yep.
I don't even want to try to consider figuring that stuff out. I do know that if you have a bird in the hand, that is worth 10 times more than 2 in the bush. Right now, there's a lot more birds that can be in our hands. Take advantage of that opportunity. If you're unsure what you can get on your safe money and what really should be risking, call my team. I have been doing this show for a decade, and I have trained these guys to understand one thing. Find out where the client is and find out really what they want to achieve. Show them the best of what's available and let them make good decisions. If you want that kind of analysis, call my team today and let us show you a different way.
Thanks for listening to the Retirement Solution Podcast with John Hicks. Begin the conversation about your savings plan with John and the team at J. Hagan Capital by visiting retirementsolutionradio.com. Be sure to listen to John's radio show, The Retirement Solution, Saturdays at 8 a.m. and Sundays at 9 a.m. on News Radio 840 WHAS.
J. Hagan Capital Inc. is not licensed in all 50 states. To find out if J. Hagan Capital Inc. is licensed in your state, please call 502-690-5635. J. Hagan Capital Inc. is not affiliated with nor endorsed by the Social Security Administration or any other government agency. It does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Jonathan Hicks, insurance license number 548962.